there are some things you need to know before going into cryptocurrency. So if you thought today you were going to get into cryptocurrency, here are the things I think you should know before making those steps. One, cryptocurrency is an extremely volatile market right now. Let's step back out for a second and I will show you. Right now, this is Bitcoin. And here's today. It's trading at, right now, oh, it hit almost 15,000 today. At the beginning of December, today's January 2nd, in the middle of December, it hit its high at $20,000. So in the course of half a month, it's gone from $20,000 down to 15. So that's a 5,000 drop. In between there, about December 22nd, you hit a low, and it was about 10.5. So it almost went in half in the matter of 2 weeks. And then you can see if you go back to November, mid-November, you're trading at like 6,000. So you can see it's up and down. Over a matter of weeks, it just shoots up and comes back down. So if you're faint of heart, this may not be the game for you. If you want to see your investment drop in half in 2 weeks, if that's going to cause you to panic, then this might not be your game. All right, let's step back into my little presentation here. It's not something you can get into in just one day. When I started, I thought, okay, today's the day I buy cryptocurrency. And it's not that easy. You have to create some accounts. You have to get the accounts verified. Lots of places require your ID and a picture of yourself. So, and then once you get your accounts, you then have to transfer your fiat currency into your account so that you can buy a cryptocurrency. So if you're hoping today to get into cryptocurrency, it's probably not going to happen. There are some exceptions on CoinBase, which I'll show you in the next movie, where you may be able to get a handful of cash into your account and buy some Bitcoin today. But other than that, just know it's going to take a week or two to get into this. Another thing you should know is there is definitely a learning curve. As you might have noticed already, there's a lot of theory and a lot of things that are going on that you need to understand just to understand what cryptocurrency is. And then because it's so new, trading it and moving money in coins is a little more confusing. If you're used to going on E-Trade and buying stocks and bonds and all that, it's not that simple. It's not as regulated, and because it's so new and people are just getting into it, they haven't fixed all the problems. When I first started to get into it, starting a new account at places was like a week. It was a week just to try to get the website to work because the volume of people buying cryptocurrency was so enormous. They hadn't planned on handling that. So everything's new right now. You got to realize there's a learning curve. Okay, then there's a couple safety measures you should take. If you decide this is for you, here are some guidelines that I think are conservative and will help keep you safe. One of them is don't invest more than 10% of your savings. So if you're and don't invest any money you're relying on. If you're like saving for a new house or a down payment, do not put that money in cryptocurrency. If you're going to feed your family with the money, don't put it in cryptocurrency. It needs to be stuff you don't need right now and that you're not relying on. And then once you get that amount that you want to invest, don't put it all in on the same day. Space it out over time. They call that dollar cost averaging, right? So it's to keep you safe that if you buy accidentally, like if you bought today and it turns out today's like, it's going to be the 6-month high today, there's no way you'd know that. So if you put it all in today and you put it all in at the high and tomorrow it halves and it stays like that for a year, you have a lot of ground to gain. Whereas if you put, 10% of your investment in now and then it drops in half, you still have 90% to invest over the next coming months, and that will help mitigate your risk. A lot of people will say that's crazy when the market's going up. You'd want the temptation is to put all your money in now so that it can just gain, but you never know when it's going to drop. So you don't want to have all your money in all at once. So for me, for example, I bought in Bitcoin when it was $17,000 a share. Now it's down to whatever we just saw, 14, 13. So if I had put all my money in when I first got started, I'd be in real trouble. But then 2 weeks later, when it dropped down into the tens, I bought some more when it was at 10,000s. So that helped offset the loss I had realized. And the last thing is research a coin before investing it. Know why the coin exists, know if the team is good, know about the coding as much as you can. Like I said, if you're new, this is going to take some effort, but there are some resources I'll show you to help you understand things better. All right, another thing you should know are the names of the three big, they call them the big three cryptocurrencies. That is Bitcoin, which you've heard about, Ethereum, and Litecoin. And then cryptocurrencies like stocks have, like a stock has a ticker symbol, Bitcoins have their symbols, their little abbreviations as well. So Bitcoin is BTC. So if you hear people talking about BTC, that's Bitcoin. Ethereum is ETH, and Litecoin is LTC. And I'll show you where you can look up all the coins, little abbreviations, and more about each coin in one of the later videos. All right, then the last thing you should probably know is if you trade between coins and then trade back to another coin and you realize a gain, you have to pay taxes on that. In the United States, it's considered capital gains, and that can either be short-term or long-term, depending on how long you held the coin. Just be aware, for the most part, I just will use a third-party service to keep track and pay my taxes, because it gets difficult to keep track of all your transactions and know what you've gained and what you haven't gained.